bring in Eric Jackson. He's founder and president at EMJ Capital. Eric, thanks so much for being with us. I think this is the big question for almost every investor. They're sitting on so much in terms of gains. And when do you just say, this is enough? You know, I made all my money by selling early is one of my favorite sayings. What do you think?
Well, this market's continued to surprise to the upside, Amber. It's been interesting. There's been quite a couple of Wall Street strategists who have been kind of longtime bears that have like recently thrown in the towel. And I saw Julian Emmanuel was kind of the latest yesterday, I think, to do this from Wedbush, and came up with a street high 5,600 target. I still think that's way too low with more than 6 months to go in the rest of this year. So I think 6,000 is possibly like, in sight for this year. And so I think you don't want to just sort of bail out and roll into cash too early, because you want to look for, interesting standalone stories, I think. I know we're going to talk about Nvidia, but it's not a market where you can just throw all your money in the Mag 7 and think you're going to have a great return. There's going to be dispersion. There's going to be certain names that do really, really well in this environment, and I think you want to sort of pick and choose and look for those interesting stories to get behind.
So that's interesting. You see maybe 10% more upside on top of an already 15% gain for the S&P 500. The thing that seems to be concerning people, though, is that the market internals are not looking amazing. That is, there's more companies making lows relative to highs, and it's really just that narrow concentration that's driving things. Why doesn't that bother you?
Well, it was interesting that with the Fed announcement last week that the Russell, the IWM, kind of rolled over pretty almost immediately after that. You would think that, and we saw this at the end of last year in November and December, that when signs of inflation cooling come, when signs of cuts for the Fed come into the horizon, that you're going to see a lot of these like growthier stocks, start to do well and see the 10-year recede. We saw the 10-year recede just in the last few days, and yet most stocks, including small caps, seem to be correlated with it and go down as well. Today is a little different, and I think yesterday the Russell had a bit of a comeback. So I agree. I mean, it would be nice to see more names participating in the rally and not just being an Nvidia rally and all that. But I think I'm still optimistic that that's going to happen as we see interest rates drop. I mean, that's better for smaller cap stocks for sure.
Okay. Back to my original question about Nvidia. You hold it. You continue to hold it. You're not harvesting a gain here.
No, I think actually it's we could be into. We haven't gotten to the ebullience stage yet with Nvidia. What's interesting is if you look back over the last 5 years on what Nvidia's forward price earnings multiple has been, obviously it changes all the time, and there are certain moments in time when people get really optimistic behind Nvidia, and suddenly like this forward price earnings multiple goes to like over 60x forward earnings. And even though the stocks had a great run through all of last year in 2023, even as the stock went from like 145 to finish the year at something like 450, the forward price earnings multiple dropped and was like at the end of last year was more than a standard deviation and a half below the mean of where this thing had traded out over the last 5 years. Just recently, we got back to the mean. Even you would think like, oh, we're in the euphoria stage. It's time to take the profit. We're only at the mean. And it's been quite common in the last 5 years to see Nvidia trade a standard deviation and a half above the mean. If we did that today, Amber, this would be a 220 stock, not a 135 stock or whatever it is now that it's just past Microsoft. So, we haven't yet got there. I think we might. I think Nvidia goes to $200 by the end of this year. And maybe it's because when they start rolling out the Blackwell chips and people, see that they're buying them like hotcakes at better margins, and there's, it's much better from an energy perspective and power and all this kind of stuff. I just think there are a lot more catalysts to come. So if we get there, I'll probably take some chips off the table, but we haven't gotten to the euphoria stage yet.